effectively I have over declared output VAT. So my output VAT is over declared. And I should never have raised VAT on those invoices. So I've collected VAT when I shouldn't have, but I've also actually gone and paid SARS. So we're presuming everything's up to date and everything's hunky-dory and we've done all the right things so far. But effectively, I've actually collected VAT for SARS when I shouldn't have. In addition, I would have claimed VAT, input VAT related to the provision of that staff transport. Now, admittedly, there wouldn't be any VAT on the fuel, but it could be the VAT on the vehicles, it could be the VAT on certain of your service fees, insurances, that kind of stuff, right? So your default is essentially that your output VAT is overstated and your input VAT is overstated. The net result between the two, I'm generalizing here, should generally still though result in output VAT payable, right? From your customer's point of view, they have overclaimed input VAT. Now, strictly speaking though, your customer isn't actually in default because they've just done whatever you invoiced, which protects them from a legal point of view because you haven't actually, because they have, with the fact that there was that you gave them an invoice, there would have been output VAT charged by you and input VAT claimed by them, right? So practically there's actually 3 separate steps that need to be made. Strictly speaking, you need to go to SARS for you as the person who did this and go and say, right, I have made mistakes for the last 2 years. Now, you will not be able to do a VDP application to rectify this because you've actually overpaid SARS. So VDPs are only available where there's been a default. Here, I haven't defaulted. If anything, I've been over eager. So I can't do a VDP. So what I'm effectively going to have to do is go and apply to SARS under Section 93 or 95, depending on which one. I'd negotiate a little bit with SARS, to ask for an estimated assessment or effectively a reduction assessment to be issued for you. This wouldn't be an additional assessment, this would be a reduced assessment. So, and that would have to be a Section 93 application. The good news is this is still within 2 years, so none of these tax returns have prescribed. So fortunately, my Section 90 remedies are all still available to me because there has been no prescription. But you are going to be having to go ahead with sort of that big uphill battle of getting SARS to agree to amend your VAT returns for all the previous years in terms of Section 93. Your clients, strictly speaking, if you're fixing your output VAT, you should be credit noting all those invoices and issuing them with the correct VAT, meaning there's none. It's actually going to leave your clients actually at most risk because technically they've overstated their input VAT claim, which, yes, they can then go and correct when you do a credit note and a refund if you really wanted to for them back at that point in time. Okay. Now, that is the administratively and the legally correct answer. Practically, oh yes, absolutely, this is going to trigger an in-depth audit. And that was going to be my very next statement, is that my head hurts just thinking about the admin that this will create and the amount of frustrating conversations you are going to have when you sit and try and explain to someone from both SARS and your client, for that matter, as to what's actually gone or how we need to fix this. Pragmatically, given the fact that there is given the fact that there is actually no default here to SARS, because you raise the output VAT, the other party claimed the input VAT, so SARS is in a nil-sum game position. This is one of those where, even though it's not the technically correct answer, I would actually just go, stop raising the VAT from now going forward. I would sit down and have a Section 95 discussion and go and say, guys, there is no default. I've declared that there is no default. I will fix it going forward, but you are not out of pocket, because here's our output, there's your input, and we move on. Because your client is also not out of pocket, because with or without VAT, they would end up paying you the same amount. Yes, there's a cash flow consideration, but because they get to claim the input VAT, it becomes a bit of a moot point. Obviously, if there was and I'm here also running this off the fact that most of your creditors is exactly because most of your clients are big corporates. So your clients would all have claimed input VAT. This would, for me, be a fundamentally different question if you were in a situation where most of your clients were, Joe Soap and Joe Blogs, who weren't able to claim input VAT, because then there is a very real cost to them, and then you need to navigate that one a little bit differently. All right. SARS could come back and argue that there is default with respect to the input VAT that you could have claimed, that you now had claimed but didn't. That you had claimed because you were showing VATable supplies. In my experience, though, they tend not to get too uptight about that, because ultimately that's then where the chain stops. Whereas it would just have rolled forward to the next guy. That I'm not too worried about. Having said that, if the numbers of input VAT, also in most cases, if you're running a staff transport company, your input VAT claims are generally going to be quite small, because your two biggest cost factors, being the staff and the fuel, don't have VAT on them anyway. Look, if you bought some extra big buses to go and do this, okay, then maybe you might want to go and do a VDP on those. But without that, I mean, your input VAT quantums I cannot see being very big, right? Generally, I'm always one of those who go and says, do the legally correct thing. In this one, I think it's worth having a conversation with SARS, going and saying, guys, going forward, we will fix. And there is no default here to you. Are you happy that going forward we just exempt? Okay. There is also the other point to go and say that technically, if you've recovered output VAT and paid it to SARS, you technically actually can't go and refund that to the client. Okay. So in this case, it is a bit of a disaster. I'm not going to lie. But the big benefit for you as the taxpayer is that you actually aren't in default. Because ultimately, you paid SARS more than what you would have if you'd done it correctly. So even if if you had claimed input VAT during those time periods, you've actually made physical payments to SARS when you should have made none. So if they try and throw the book at you, they can't charge you understatement penalties, because you raised the output VAT. They can't charge you interest because you made payments when you shouldn't have. So that's at least the big benefit here, and why I'm less concerned than if it had been the other way around. If it had been the other way around and you'd exempted something which should have been VATable, then the correct answer is VDP, VDP, VDP. Okay. I'm seeing a few comments coming through in the chat box from people who have lived this reality to go and say, SARS might ask you to pay some interest, to account for interest on the credit balance, is in which case then you would have, but they won't go back and reopen, because I also know this is a headache for everyone involved. Now, admittedly, this is also on the presumption, and thanks for the comment here, this is also on the presumption that the client has actually paid you everything. If, however, you had a client who's wide awake and gone and said, hang on, you invoiced me, you shouldn't have, in that case then, though, I'm sincerely hoping you don't have 2 years worth of invoices to deal with, and that you can get it fixed in a month or two, in which case you can probably fix it with credit notes. It's not going to run over multiple years of assessment. Okay. See, the other reason why SARS is also, it's not actually in SARS's best interests to go and reopen everything, is even if I know, go back to the scenario that they had in here, even if they come back to us and go and say, guys, you shouldn't have claimed the input VAT here, so we want the input VAT back, then all it does is that it increases your costs for income tax purposes, and you can claim it as the increase in expense as an additional income tax deduction. So really, as I say, when once you've stripped away all the admin noise, the consequences are generally small in the context of a situation like this. Okay. Please also then, if you go and if you do have a client who refuses to pay VAT, get that fixed sooner rather than later, because the longer you leave it, the more complicated it becomes to fix an issue. Okay. Right, that one makes my head hurt. And it's definitely not the kind of conversation we ever want to have with anyone. But yeah, it happens.